What's up? All right, I'm Shaan. I'm from the Milk Road. Any subscribers here to the Milk Road? Anybody who reads the Milk Road? All right, that's pretty good. For those of you who don't, milkroad.com, go subscribe right now. Okay, Furkan asked me to give a talk, and I decided to go straight for the top. So my talk is called Why Warren Buffett is Dead Wrong About Bitcoin. And I know this is like a Web3 conference and everybody's doing fancy, schmancy, we got DeFi, NFTs, crazy stuff. But it all comes from the root, the OG of the OGs, Bitcoin. And not in this room, but in a lot of rooms I go talk in, there are a lot of people who believe that Bitcoin is useless, Bitcoin is going to zero, Bitcoin is a Ponzi scheme. These are things you'll hear. And not just from, the average person, you'll hear this from Bill Gates or Warren Buffett. And I always felt when they said this, a little disappointed. These are people I look up to. These are people who are very smart, successful, clearly. So why is it that they think something different about Bitcoin than I do? And so I want to basically debate Warren Buffett. But the best part is he's not here, so I am going to win. Okay, so let's start with stuff that Warren Buffett has said. So what has he actually said about Bitcoin? So he called it rat poison. And to his credit, actually, he went back, corrected it. He said, no, Bitcoin is worse than rat poison because rat poison at least has some utility. So, that was a good one. Solid line. And he said many things. He says that it's useless. He says that it's a mirage. It's a get-rich-quick scheme. And that the government won't allow it. And so these are some of his arguments. And if you want to know why he said those things, he's kind of expanded on it. He said, well, I say that it's useless because Bitcoin's not productive. It's not like a farm. It's not like a business. It's not producing assets, it's not producing products, it's not producing cash flows. And so therefore it's useless. That's one thing he said. And so I want to actually take these and I have the opposite view. So I will argue that Bitcoin is useful. And it's not about making money or get rich quick, it's actually about savings. And lastly, that it will ultimately replace the dollar as the global reserve currency. So let's start one by one. The first claim is that Bitcoin is useless. There are different types of assets. There's productive assets, like we said, farms, businesses, that sort of thing. They produce cash flows, they produce products. But there are also non-productive assets. So art, money, right? The dollars in your pocket. I think Elon has said this once. He said if you went to if you were stranded on an island and all you had was $1 billion of cash, you would be, it would be useless to you. It would have no value to you. That's because he's right that dollars and art don't produce products. They don't produce additional cash flow. They are non-productive assets, similar to gold. And so the first area that Warren Buffett's argument breaks down is that he says because it's non-productive, it's not valuable. And I think that's pretty clearly wrong. Gold has value, art has value, money has value, and Bitcoin also has value even though it is non-productive. And so how is it useful? Well, there's this thing about money, which is that it's very useful because it solves the coincidence of wants problem. And the coincidence of wants problem is very simple. It's just that, let's say you have wheat, and you want shoes, but the person who has shoes doesn't want wheat right now. And so unless two people, without money, two people would need to want exactly what the other person has in order to make an exchange. And so money obviously solves this problem where we got away from bartering and we had something in the middle, right? You can trade the wheat for money, you can trade the money back for shoes, and the person who has the shoes gets money, they can trade it for the next thing. And so that is the first use of money. It's why you need money instead of just, like Warren Buffett would say, productive assets, real estate, businesses, whatever. You need money as an intermediary so that you're not constantly going around and looking for somebody who wants exactly the thing you have at that time. And money has many forms. So today, most people think money is just one thing, but actually money has been many things over many years. So money has been shells, it's been stones, it's been coins, it's been paper, it's been plastic. Money takes many forms over time, and over time we've invented better money technology. So gold was better than, let's say, beads or stones, because with gold, it was more scarce. There was a more finite supply compared to stones, which you could find everywhere. Gold was also more fungible. You could just swap one gold for another, whereas every stone looked a little different. But paper money was better than gold because paper money was easier to transport. You didn't have to transport huge bars of gold in order to transport or transfer value, right? So we've been consistently inventing better forms of money. So I think you've probably seen that money is not useless. Now let's say, is Bitcoin useless? The criticism that Bitcoin is a get-rich-quick scheme, I think, is wrong for many reasons, but the main one is it's not really what it's designed to do. Bitcoin is designed as a savings technology. So let's imagine you have a cone or a bowl of ice cream, and it's sitting in a room. If I put that ice cream right here and we left it for a minute, it'd be okay. 10 minutes, it'd probably still be okay, but an hour, a day, a week later, we all know that ice cream is melting. And so you would not want your ice cream to melt, so you would want some way to save it, some way to preserve it. And so in my analogy here, your purchasing power, or your wealth, is the ice cream. And Bitcoin is like the freezer. It's the way to preserve your wealth. And so, I'll explain why Bitcoin might be a better way to do that than dollars. So dollars are considered to be safe, and Bitcoin is considered to be risky amongst people like Warren Buffett, Bill Gates, that sort of thing. And so I question that. I question that the US dollar is safe, and I question that Bitcoin is risky. Let me skip forward here, I'll go back. So the dollar is designed, the Federal Reserve System is designed to inflate at roughly 2 to 3% a year. That's the plan. That's not like the mistake, that's the plan. And if you just take them at their word for it, there's a couple different ways you can look at this, but if you have $100 today, and I'm 30 years old, let's say I wanted to pass my wealth down to my daughter. I'm probably gonna live till I'm about 80, let's say 90 if I'm lucky, 100 if things really go great, but let's just take 80. So that means I got 50 years before I pass that wealth down to her. And if I'm playing it safe, I take my $100, I go put it in a safe or a bank account, and I want to pass that to my daughter 50 years from now, she's expecting to have, what, less than half of it, just at the normal planned 2% inflation, right? So this thing that's considered safe is actually a guaranteed loss of a certain amount of money. And so there is some comfort in knowing the guaranteed loss, but I don't know about you, but I don't love guaranteed losses. So whether it's at 2%, 3%, or what you see nowadays, which is, let's say, 8 or 9%, either way, your ice cream is melting. Purchasing power is melting. And so that's one way where Bitcoin, obviously solves that problem. So Bitcoin is different than gold or dollars in a couple different ways, right? It is scarce like gold. It's not inflating. It is durable like gold. It is neutral like gold. It is not controlled by any one government around the world. It is also easier to transport than gold. So gold is great in all those ways, but it's terrible to transport, terrible to transfer from one person to another, so it's hard for trade. Dollars are easy to transport, but they're not scarce, they're not durable, they're not neutral, right? The government controls it, and any country you go to, they control their own currency. And so Bitcoin has some properties that make it a better form of money. And in tech, a better form of products we call 10x products. You have to be a 10x product if you really want to take market share from the existing products. And so, Tesla was a 10x product. Tesla is worth, 10 times more than the next biggest car company. More than that, actually. Apple came into the mobile phone game and the cell phone game and ended up building a $1 trillion company or multi-trillion-dollar company, where the BlackBerry or Nokia before that were, more than 10x less valuable than Apple. And same thing with Uber. I remember when I moved to San Francisco, it was 2012. And was anybody taking, before Uber, did anybody here take Sidecar? These other apps that were out there. I remember the first time I moved here, my friend was like, hey, we're gonna go to this place. I said, great, we go outside, and he's like, get in. I was like, who the hell is this? This is just a Honda Accord. Do you know this guy? Who is this guy? And he's like, oh, we take sidecars here. I said, what's a sidecar? And he kind of explained to me, and at first I thought, wow, that's strange. Again, seemed pretty risky, but it was better in these other ways. It was more convenient, it was easier, it was cheaper than a taxi, and so that was my first experience with a 10x product, firsthand. I remember talking to an investor who was considering investing in Uber at the time, and he was doing all these calculations about how valuable Uber could be, because the valuation was going up and up and up. And he was doing an analysis of, he said, well, look at this. I mean, these guys are overvaluing it like crazy. Even if they, the San Francisco taxi market, I don't remember what it was, but let's just make up a number. 300 billion. The San Francisco taxi market is 300 billion a year. Even if Uber takes, well, 300 billion is pretty high. Let's go 3 billion. Even if Uber takes, 25% of that or 30% of that, that's just this taxi market. It won't be as valuable as these guys are trying to value it at 10, 50, whatever, $billion. And what actually ended up happening was pretty interesting. You fast forward 2 years later, Uber actually tripled the size of the overall taxi market in San Francisco. So forget my numbers, 3 billion, 300 billion, whatever it was. I think it was more like millions. But either way, it tripled the size of the taxi market. So that's what 10x products do. When a 10x product shows up, it actually doesn't just take market share, it makes the entire market bigger. And that's what I think it's going to do. And that's what I think Bitcoin is going to do to gold. Gold today is about a $10 trillion asset. And when most people try to value Bitcoin, they say, wow, this would have to be, it would have to take half of gold's market share. And I think what they get wrong is that if Bitcoin works, the total market for people that are trying to store their wealth in something that's not dollars is going to be much bigger than what gold is today. And so that's what I think is going to happen with Bitcoin. Here's some math that makes it happen. But I'm going to skip this because really it's not about the price. Remember, we're about debating Warren Buffett. So Warren Buffett is right about a couple things. There are some risks to Bitcoin. And if I was just to go down the chain of what somebody who's a hater of Bitcoin would say, they would have first said, when they heard the idea in 2010, they would have said, no one's going to buy this, no one's going to believe in this. That was the first risk to Bitcoin, was that people would see there's some imaginary currency that some anonymous person created and they'll never buy it, they'll never believe that it's valuable. That was the first and biggest risk of all for Bitcoin, was that from day one, nobody would believe in it. Obviously, that's turned out not to be true. The second criticism or risk that was valid was that somebody would hack it. Somebody would find a way to counterfeit Bitcoin, or that they would hack the system, or that they would find a way to double spend the money. And now, here we are 10 plus years later. If somebody could do that, they would be, they could make billions and billions of dollars if they could, so that the honeypot's there and nobody's been able to do it just yet. Doesn't mean it'll never be done, it just means, wow, 10 years and nobody's been able to do that so far. The third was that somebody will make a better coin. So, okay, maybe people will start to believe in this, fake magic internet money, and maybe it won't get hacked or counterfeited, but who's to say Bitcoin's the one, right? Maybe there is a better coin that's out there. And similarly, I think that there have been, over 20,000 cryptocurrencies that are tracked, probably another 20,000 that people have made that nobody knows about. And Bitcoin still is the biggest, has the biggest brand, and has differentiated itself. Everybody the second best coin or the second most popular coin, Ethereum, tackles totally different use cases because going straight on with Bitcoin won't really work. So the first three risks we've sort of scratched off one by one, and now we're sort of in this, it can't, think about how far we've come. I agree that it's valuable. I agree that it's not going to be counterfeited or hacked. I agree that there's not going to be another coin that beats it. And now we're just in the final two questions. Can it scale, and will the government allow it? Will the government be able to crack down on it? And you can look at the price as basically just a relationship with these risks. So, when Bitcoin was pennies or even dollars, it was because you didn't think anyone would believe in it. And then it went hundreds of dollars, thousands of dollars, now tens of thousands of dollars as we've gotten through three risks. And to get to the next stage where it's hundreds of thousands per coin or even millions per coin, it's just these last two risks that remain. And then there are some big buts, right? So there are some criticisms that I think are valid. The big buts that you get when you walk down this path that even Warren Buffett would argue is that I thought you guys told me that Bitcoin was a inflation hedge. Right? People always said that Bitcoin's an inflation hedge. Bitcoin, it's a fixed supply. It doesn't inflate. So now we're seeing some of the worst inflation that we've ever seen. Why is the price going down? Bitcoin, right? Does anybody have a theory on that? By the way, I'd love to hear an answer to this.
Liquidity.
What's that? Raise your hand. Who said that? Oh, way in the back. What'd you say?
Liquidity.
Okay, say more words, like liquidity, I don't know, water, what, like, say something more than that.
Just like the general Fed liquidity, like over the last 2 years, liquidity, the general liquidity for the Fed and Bitcoin, that trade results exactly the same.
Okay, I didn't fully catch it, but I think what you're saying, if I hear you correctly, is yeah, the price is going down because it's something to do with the way that the financial market works for trading, buying and selling Bitcoin. You're saying, yeah, the liquidity is the reason that the price is going down. Anybody have a different answer right here in the purple?
Price of need is good right now, so if people some need, we take on some profit a bit.
So you think people are switching from Bitcoin to Ethereum, and that's why the price of Bitcoin, but the price of Ethereum is also going down. So I don't think that, the last year, as inflation has gone up, the prices of all crypto have gone down. So I don't think that one would hold. Ali. The Fed what?
And monetary tightening.
Fed and monetary tightening. Again, I don't know what that means. I'm a dumb guy. Explain it in simple words to me. They're not printing money anymore, okay? I hear you. Yeah, right here.
People are viewing it as an asset class, as an equity, and so as equities go down, Bitcoin goes down, up.
Yeah, so you're saying that people view it as a risky asset to buy, as like an equity, and all equities have gone down, and so crypto goes down more, right? That's kind of what you're saying. I think that some of these answers are true. There are market dynamics like this that make that have caused the price to go down. But I think fundamentally, the problem is actually in the question. So there's an assumption that Bitcoin is an inflation hedge, which says that if the U.S. government starts printing money and inflating the currency, Bitcoin price should go up. And in reality, it's a little more complicated than that, but it's also simpler than that. The simple answer is Bitcoin isn't an inflation hedge. It's an alternative monetary system that doesn't inflate. So think about it like you guys are, probably a lot of you are entrepreneurs. Bitcoin is basically anti-dilution. The money supply of Bitcoin cannot be diluted. And so it's not that it's an inflation hedge, it's that it just doesn't have inflationary properties itself. And so some people might try to use it as an inflation hedge, but that's an investment strategy. The reality is just that you have one monetary asset, the dollar, which is definitely going to inflate. And then you have an option to use this other money system, Bitcoin, which is not going to inflate. And so the fact that it doesn't inflate is just a benefit of Bitcoin. The other common criticism, the other big but, is that how can you call this money? Nobody uses it for transactions. And I think that's very true. People who say there's tons of transactions going on, I think they kind of miss the point, which is that even the people who believe most in Bitcoin are not using it day to day as a medium of exchange. That's true. And that's because money assets go in 3 stages. So first they start as a store of value. After that's done, then they become a medium of exchange. After that's done, then it becomes a unit of account. The unit of account means, the water bottle is priced in Bitcoins, priced in Satoshis. So what people criticize is that it's not doing all 3 at once. But if you look back through the history of time, when money was beads or money was coins or money was gold, in each case, first it starts as a store of value. When that whole thing is done and it's widely adopted, then it's used as a medium of exchange. And then after that's done, then it becomes a unit of account. And people are criticizing it because it's in a very small time scale, but they don't realize that it happens one after the other. And so I'll stop there. In summary, Warren Buffett's fucking wrong. Bitcoin is not useless because money is not useless. Bitcoin is not a get-rich-quick scheme because Bitcoin is actually meant to save your purchasing power and preserve your wealth. And lastly, Bitcoin is not going to be used as a medium of exchange or an actual currency until first a large number of people all use it as a store of value. And then at that point, they'll start trading it with each other because I can give you Bitcoin once I know that you also store your wealth in Bitcoin. We don't need to go to dollars or some other currency. We could just go back and forth that way. So thank you. That's all. I'm Shaan from the Milk Road. Hope you enjoyed my talk. People want to do questions, or are we good? Yeah, I'll also take questions about this or anything else, because why not? How are we doing on time? Okay, we got like 10 minutes. Yeah.
So brilliant insight into the adoption.
What's your name, by the way?
Nimi.
Nimi. Okay, great.
Yeah, brilliant insight into how each currency gets adopted, like historically. I am curious about what are some critical bottlenecks that Bitcoin has to break from the flow from 1 to 2 to 3.
Okay, yeah, so she's talking about this. Basically, great. Every new form of money first has to go step 1, step 2, then step 3. So what does Bitcoin need to do that? The short answer is just time. So if you look at how any technology, spreads over time, it's like a curve, right? The crazy people go in first, and then the enthusiasts go in after that. All technologies go through this adoption curve. Bitcoin's going through that too. You can see every year there's more wallets, every year there's more transactions. So that's the main thing is like all we need to do is like the ball is already rolling, just don't stop it, right? So I think the first thing is just let it keep going, that's time. The second thing is try not to have something stop it. How could it get stopped? Either governments get really aggressive about it, and it's not that they can stop Bitcoin, but they can make it very inconvenient for their citizens to own it. So they can make it illegal to own. They can ask banks not to process transactions that are getting your money to Coinbase or whatever, right? They can tax it heavily. They can do many things to get in the way of the ball rolling. So first thing is time. The second thing is hope that doesn't happen because that will slow down the adoption. Not stop, but slow down. And then the last thing is people like the people in this room, developers, are trying to find ways to make it easier to onboard. So make it easier to understand, easier to use. And people like me, right? I write a newsletter about crypto called The Milk Road, and that's because I want to talk to people about crypto because I think it's great, and I want more people to understand it and like it and get to know it. And so those are the 3 things that need to happen in order for it to go through this chain of events faster. But the reality is that these things take like multiple decades to get hundreds of millions of people to do. Yeah, what's up? Name?
I'm
Krishna.
Krishna. So in like 20 to 50 years, do you see Bitcoin being used as a medium of exchange or as a reserve currency where it's like $100,000 million?
So the question was, in 20, 30 years, do you think Bitcoin's going to be used as the actual currency of exchange or as the reserve currency? I'm not sure, to be honest with you. I don't know. It does seem like stable coins are going to be the thing that we used to do transactions because they're stable. So it's just an easier way to price things and to exchange value without having to be an investor every time you do a transaction. So I do think that it'll most likely be stable coins that are used as the core medium of exchange, and the stable coins basically trade into their underlying assets like Bitcoin. Let's do somebody in the back. In the back, yeah. Shout it out.
Yeah, Arjun, what have you heard as the prevailing kind of theories around how Bitcoin gets around the government process? Like, is it going to slide by through, it seems like a tightrope that it has to walk in order to actually get by that big food.
Yeah, great. So the question is, how do we defeat the final boss? Right? The government is the final boss. How are we going to beat the boss? Right? Right. Mario got through the level, and now he's staring at Bowser. What are you going to do? And the good news is that the government is very big and very powerful, but also very clumsy. It's sort of a David and Goliath situation. And so, governments are slow. That's the first piece of it. So they're slow to react. The second thing is that they're not unified. So around the world, all the governments don't act in unison. Every government does a different thing. China might take one stance, but India will take another, and the US will take another, and so they're not coordinated. So that's the sort of second thing on your side. The third is really a mutually assured destruction. So the more that citizens adopt Bitcoin, the less likely politicians who want the vote of citizens are going to do things against Bitcoin. So the name of the game, the game theory here, is get Bitcoin and any cryptocurrency distributed as widely as possible, so that if somebody comes and tries to crack down, they're affecting a huge amount of the population, because then they won't do it, because then there will be large pressure against them to do it. If Bitcoin is only held by billionaires, tech enthusiasts, and a very narrow set of people, it's a lot easier for a government to crack down because it's not going to affect their base, quote unquote. So that's the game theory of how this plays out. Is the wider the distribution gets, the more people who own a little bit even, the less likely it is that the U.S. government or really any government is going to be able to do this. But the truth is that crypto actually doesn't need the U.S. So there are these much broader trends. I think there was this amazing survey that happened that was like, they asked a bunch of questions, and the one question that stood out was, how much do you trust institutions? So Trust in institutions. So it's basically, do you trust that the government is going to do the right thing or the wrong thing? Like, what do you think they're going to do the right thing? And then secondly, do you think that they're competent or incompetent? And basically, they tracked this over a number of years. And like in the last 5 years, the slide of government, of trust in institutions, especially governments, is that it's sliding down from they think they're not going to do the right thing and that they're not competent. And so the less that people trust institutions, the more they'll flock to a currency that's not owned or run by institutions. And this is also happening with schools, it's happening with media, right? Like 10 years ago, you never heard the phrase fake news, right? Like that wasn't like a thing, and now it's everywhere, mainstream media, fake news. And so people are losing trust and losing belief in the competence of large institutions, both in education, news media, government, everywhere. And all those are tailwinds for crypto, because what's the solution to something where you don't trust the institution is something that's backed by math, controlled by no institution, and you can possess it yourself and you don't have to trust anybody. So those are things that are going in favor of crypto. All right, let's do a couple more. Amen.
So Sean, question, you sometimes mention in your newsletter where you get to talk to some smart people.
Yeah.
So while you were able to counter Warren Buffett, what's the smartest argument against Bitcoin that you found compelling?
Yeah, I tried to lay some of them out here. I do think that the largest counter argument is going to be on the actually like more of the first bit, which is just, is there going to be, do people really believe in it, or is it a small number of people speculating on it? And there's data that's out there, right? Because you see wallets, but you don't know how many wallets are controlled by individuals, and people are trying to create this map between like human beings and wallets. But the biggest counter argument would be, how much is that adoption, that core belief in Bitcoin growing amongst actual individuals on Earth? And the good news is that it appears to be growing. It's just not very concrete. It's not evidence you can just say, look, here's the numbers. It's very clear. It's like everybody's sort of like analyzing an estimate, and some people would question those estimates. They would question those understandings. That's the first like valid argument, is that actually it's not growing in belief as fast as you think, because money is just like a money asset is not measured by number of transactions per day. It's measured on number of people who believe that this thing is valuable. If I take a dollar bill and I go into Africa, into some village, there are people there that will be like, that's valuable. You want this mango for that dollar? I'll do it, right? And so that's what Bitcoin needs to do, or all crypto needs to do, is it needs to get more and more people over time to believe that it's valuable. And so there's a question mark of like, how fast is that happening and how many people truly believe? The evidence appears that it is growing and they do believe. In fact, there's a guy, Stanley Druckenmiller, who's like one of the legendary investors, sort of like a Warren Buffett style guy, but who does believe in Bitcoin. And the thing that got him to believe was, he's like, yeah, I get it, everybody loves it on the way up, but what's gonna happen on the way down? And his analysts or his buddies or whatever, they showed him a stat, which was that when Bitcoin crashed from 18,000 down to 3,000, that like 80% of Bitcoin holders didn't sell their coins. I don't know if this stat is true, but he goes around and he talks about it on TV. Again, I wish I had the data more clear there. But if that data is true, and he's a pretty legit guy to be going around saying this data, that shows a very high level of belief amongst people who hold the coin, that they could withstand a crash and bounce right back up. And so the longer that Bitcoin can withstand crashes and then return to legitimate value, the more sort of anti-fragile it becomes. The more it can withstand the next piece of bad news or attack from bigger and badder bosses along the way. All right, who really wants it? Raise your hand even higher.
Right here.
Okay, you already got a microphone. All right, you're in.
Yeah, exactly.
I don't know how you did that. That's pretty cool.
Hey everybody, OG Kitchen.
You look like you're like in 8 Mile with the hoodie. You're about to like rap.
I'm a DJ, man. That's just spending my day out here. Question though about IP and .eths. I don't want to divert off of the subject matter too much, but institutions and protecting their IP rights when it comes down to .eths and this whole new endeavor of .eth accounts, Ethereum name service, and larger institutions reclaiming their .eths from speculators or degen speculators. Say, for example, a lot of institutions like SF MoMA and the Fine Arts Museums of San Francisco, their curators are getting involved. How would they prevent third-party speculators from owning their .eths, or what measures could be taken?
They pay up. they pay that speculator for being correct. The speculator is just saying, I think SF Momo is going to want this handle, so I'm going to buy it today. They were correct if SF Momo wants that handle, and that they'll trade it for some price. And so they pay up is the real answer. The other answer is that it doesn't matter if there are squatters on all these domains, because it's just like the internet, it's just like social media. Like, Donald Trump created his own social network, and someone claimed @Donald before he did, right? Like, you know, like, and he had to go be like, the real Donald, or whatever his thing is on Truth Social. So this happens. People go and they try to claim domains if they think, hey, this real estate is gonna be valuable, someone's gonna want this. They put risk capital up, betting on that. If they're right, they'll get paid off for it. If they're wrong, they're out the bet. It's actually a perfect market solution to this problem. So yeah. All right, what else we got? Yeah, buddy, what's up?
Hi, my name is Ramesh. So how is the world better when the final force is beaten? At the end of the day, Bitcoin is money, exchange of value, store of value. But even if there's no inflation, then the things prices will increase independently. Like things are constant, number of houses to buy is constant. So how the world is better if Bitcoin is accepted by all the governments in the world?
Depends on your point of view. So like a couple years ago, I lived in Argentina, and when I went there, I only lived a couple months, 2 months, but I got there and I was like, you know, okay, I need some pesos, and basically it was like, hey, what do you want, the blue market rate? And I was like, I don't know, what the hell, what are you saying? And basically, for people who were living there, they were getting paid in a currency that was devaluing much faster than 2%. So how does it make the world better? It gives somebody who's living in Argentina a different currency that they can preserve their wealth in, besides one that's getting devalued by like, whatever, 20% a year. Because if your wealth is going down by 20% a year, you're going on a treadmill that keeps getting faster. You can't earn more every year. You can't find investments that are gonna beat that inflation. And that's what's happening in a whole bunch of different countries. So if you're from the point of view of somebody who you don't like the way the government is managing your local currency, you now have an alternative, which will either be something you use or it'll keep that government in check. Because the government knows, oh, we can't do this, otherwise people have an alternative now. So that's the first way it makes it better. And this works across the board, right? Like, you know, Russia's not that popular right now, and Russian oligarchs aren't like the most sympathetic, you know, people to talk about, but like, do you think that they're ever gonna trust, you know, the dollar again, right? Like they had their money saved in accounts that got seized and frozen by, you know, the European and American alliance. And so, you know, people, you know, did they have $1 billion? Well, no, because they decided to trust certain institutions. In the future, they're not gonna do that. In the future, China's not gonna do that. So you basically allow governments and different institutions inside those governments to store their wealth without having to trust other governments who may not have their best interests at heart. So it makes the life better for them. So there's a ton of examples depending on your point of view, but fundamentally it's basically saying, in the same way that we don't trust the government for, you know, everything, we don't trust the government to invent the latest and greatest things necessarily, to build the best businesses, maybe we shouldn't trust the government with the money system. And if you've ever functioned in a place where the money system sucks, it's sort of hopeless. What's the point of going to work? What's the point of going and investing? If I'm investing and it's denominated in a currency that's falling through the ground, I don't really feel much motivation to go do anything. And that's the case in a lot of parts of the world right now. Green hoodie.
Yeah, it's more a remark. I don't think it makes sense to always oppose Bitcoin and the government, at least the US government, because you know, Bitcoin is hard money, and that can be good for a society, you know, country. And government have strived under gold standard and the hard money-based standard, you know. So the day the US government and the congresswomen realize that Bitcoin can be good for the country, for the economy, for the people, that can change pretty quickly, right? So it's not always an opposition like you've described, right?
It doesn't have to be antagonistic, you're right, but it is an exchange of power. Today, the power of the financial system lies with the government. If they no longer have that power, they are at odds only in that front. But politicians in an ideal world would say, oh, maybe this is for the best for our citizens and we're going to integrate it, or we're going to switch to this new Bitcoin standard rather than the gold standard or the fiat standard. They may decide to switch, but still fundamentally, power is shifting from one group that controls it to something else that controls it, right? So as that power shifts, they're fundamentally at odds. That doesn't mean it has to be conflict or antagonistic, but power is going to exchange hands. Yeah.
project markets are like exchanging or buying stuff through Bitcoin and Monero maybe. I was curious, like, what do you think that does it actually increase adoption or actually hinders adoption because some people will have a bad rap about it?
Yeah, so the question is, if Bitcoin or Monero are used on the dark web, does that help or hurt Bitcoin? On one hand, it helps adoption because people are using it for a specific use case. On the other hand, it hurts the reputation. I think right now that's become a smaller and smarter part of Bitcoin, Ethereum, the major coins, because people have realized, oh wait, this is all publicly traceable transactions. Like, that's horrible. I don't want that. I want something like Monero or Zcash or I want to use Tornado. I want to use other tools in order to not have all my payments tracked. So I think that dark web use case has gone way down over time. I mean, Silk Road, like if it wasn't for the Silk Road, I don't think Bitcoin would be around right now. Because the Silk Road was a necessary bootstrapping function for Bitcoin to have utility and price power when nobody else really believed in it. And it was really useful during that phase. It's much less useful and much less used on the dark web now. Because why would you use it on the dark? Cash is way better, right? If you wanted to do a transaction that's not traceable, cash is a million times better than Bitcoin. And then maybe the Zcash or Monero if you want to use a cryptocurrency for it. So I don't think Bitcoin is actually being used for that reason and that purpose because it's not the best at that. All right, let's take one more, I guess. White shirt.
Hey, what's up? As an investor, do you set a price target, or do you just invest and then you're like, let's get to price of how much it will go up?
Yeah, I'm not good enough of an investor to be able to do it properly. So for me, I had to decide early on, am I an investor or a trader? A trader is thinking about what is the price today, what am I going to exit at, where's the momentum going, what's the value, what's the ratio of maybe wallets to price, and they're trying to look for these signals to find these arbitrage opportunities. And they're planning to come in and out. And for me, it's a little bit different. It's sort of like I'm a buy and hold long-term investor and believer. And my goal is to identify things that I think are going to get wide adoption and be really valuable someday, buy it and hold it for, close my eyes and hold it for as long as I can until I really need to liquidate that for the next one that I think is, an even better asset to be in. So that's how I think about it, but, not investment advice, and if you know me, you know I notoriously make pretty reckless decisions, so don't look to me for investment advice. My risk tolerance is very high, so not for everybody. All right, that's it. Clap for me, and I'm gonna go away.